Hi everyone, sorry, a couple of minutes late setting this up. We just had a slight issue. I'll move the camera across. Slight IT issue. It's all resolved now, and we're live. So I want to show you the trades that we're going to be discussing in just a second. Let me start and share the screen with you straight away. Grab a pen and paper, close the doors, make sure there's no distractions. This is important because it's about making money, and I think that's a pretty important topic. Okay, let me know you can hear and see me clearly, and also put in the chat box in there where you're from, what you do as well. That's important because we want to build a rapport, build a relationship during the course of this webinar. Now, you should be able to see on the screen trading for quick gains. Now, there's no guarantees in trading, but why trading for quick gains? Well, who the hell wants slow ones? And that's what trading's about. It's about shortening the time frame so that you're holding a position for maybe 5 days. That's it, in and out, in and out. And you might have 4 open positions on at a time. And I want you to grab a pen and paper because I'm going to tell you some insightful things. One of which is I don't think you should have more than 4 open trades. Not investments. Investments is different. That's holding this for 12 months. More than 4 open trades at any given moment. Okay. David saying he can't, nothing happens when he presses the button. Currently front office support in a bank. Fantastic, front office. Okay, so that's going to be one of the data points. I'm going to give you a lot more. This is all part of my campaign for $1million.com, which is my free campaign to teach 1 million people how to be better investors. It all started many moons ago when, over 25 years ago, a quarter of a century ago, I wrote this, published by the Financial Times, Mind of a Trader, Lessons in Trading Strategy from the World's Leading Traders. So I interviewed 10 of the world's leading traders. I'm going to give you their insights. So in this 60 minutes, it's going to save you buying and reading that book, and also all the insights from all my other 17 other books, including international bestsellers like Trading Online, absolute page turner. You can see there's a lot of work that went into it. Big, thick book, all of that information in this. Plus, I'm going to give you free trading books to download at the end of the webinar and free links for all of that as well, because I want everybody always to leave my webinars absolutely over the moon and happy and say it was a complete no-brainer. First things first, I'm going to show you a bunch of live trades we've got on at the moment, ones which have made money, which ones which aren't making money, which ones which are going sideways. Overall, we're going to be net positive. It's quite clear. And I'm going to show you that in a second. That isn't financial advice because I don't know your conditions and your situation personally, any of you. So don't just go off and copy my trades in the middle of it all, okay? Like I said, let me know where you're from. I can see Stephen, Steve, Dar, Maurice. Maurice, were you on yesterday? Is that the Maurice from yesterday? No, I think it's a different Maurice. We've got Martin, Andrew James, Jitesh, Hitesh, Tejinder, Kanti, Alpesh Patel OBE. Anyway, thank you all. Let's get on with it, right? You've grabbed that pen and paper. People have had time to sign in, make themselves comfortable. This is why there's a spike in the interest in trading. Okay, there's a spike in the interest in trading because, well, people are seeing this. They want side gigs. They want side jobs, side hustles. Hi, Sebastian. And that's what it's about. So I appreciate why you're doing it. It is that money thing. I think trading is the best entrepreneurial side venture in the world. I started it as a side venture when I was a barrister and then started trading full time in my 20s. The reason it's the best entrepreneurial side gig is because you don't need an office, you don't need staff, you don't need warehouses, you don't have credit problems, supply chains, none of that. And you can stop and start when you want. You don't have overheads. All right, there is no business better than that. You don't have marketing costs. You want to sell a stock, you click a button. There's no need to advertise it, no need to market it. There's none of that. Right? That's why I think it's the best entrepreneurial business to do on the side. All of you going to all those conferences thinking, oh, what side gig should I do? How do I earn more side income? I think this is the best. There's another reason. Normal businesses, 90% of them fail within 3 years. In trading, 30% of people make money. So those odds are just significantly better as well. Now, once you start with the funds, that's why you've arrived. What you'll hopefully leave with eventually, and what I've done is leave with fun, freedom, and fulfillment, and hopefully philanthropy as well going forward. We're going to start with the funds. Let's start with the money. Given that trading is just about when to buy and when to sell, and like I said, I'm going to share with you the live trades in just a second. We're going to rip through this webinar because there is so much to cover that I want to. We're going to go through these positions in a moment. I picked these trades out of all of these. You see all these that I'm scrolling? These are all the instruments and things that from currencies to stocks. Disney, Coke that I could have selected. I've picked these for you. I've picked a retail platform so you can all participate. There's no point giving you some kind of institutional Bloomberg terminal thing. This is a free platform. It's broker independent. So you don't have to go to a particular broker, and they're free. The data's free, live, real time. As I said in my Financial Times columns, I always want things to be as free as possible with these things, okay? And you can see it over here. You can see currencies. You see a lot of different things on there. But I've picked these trades for the purposes of this. And we put it on a retail platform because it's easier to demonstrate the practicalities. So we're going to do a practical part, which is all of this, and educate you through the practical stuff. And we're going to educate you through the theoretical stuff. So you've got trading strategies, you've got a business plan by the end of this webinar. All right? It's very informative. So pen and paper, and you're also going to need a cell phone because you want to take shots of some of the screenshots. Okay, some of the screens you want to take a photo because I'm going to rip through this. You've got two decisions to make, when to buy and when to sell. All right, it's as simple as that. Given that you've only got two decisions to make, why is it that all of these other brokers, and I've taken screenshots from the brokers, why is it that these brokers say, as you can see here, 66% lose money, 66% lose money, 61% lose money? Why is that? Why and how does that happen when you've only got two decisions to make? So I'm going to give you the strategies to make sure you're in the 30% to 40% who make money. Okay? I'm going to show you how that's done through what professional hedge fund managers do. Now, I didn't invent any of this. I learned it from the professional world's leading traders that were in my Financial Times book and that I've written about time and time again. So I'm only telling you what I've already said on my Bloomberg TV shows, what I've said in my books, okay? And I've just taken and I've stood on the shoulders of giants, and that's what allowed me to set up my own hedge fund. I just copied best practice. It's like learning to play tennis. I wouldn't invent the game of tennis. I just copy what the best people are doing. So I just did that. I just copied what the best people were doing, right? And this is what it's going to come down to, and it's this. And you can see this. What I'm showing you there is sterling US dollar. Now, it doesn't have to be Forex. It can be stocks. It could be the FTSE, and I'm going to show you the FTSE in a second. Doesn't matter what it is. Each one of these bars I've chosen for the purposes of this illustration is 1 hour. Okay, so that's 1 hour. And you can see there was a sell signal. A red arrow down means a sell signal, to sell short. Okay, to sell it at whatever that price was and to buy it back later at a lower price. Now, several things I want to teach you before I go into the live demonstration in just 1 second. And the things I want to teach you is this. You've got two decisions to make, when to buy, when to sell. Actually, there's a couple more than that, such as where to exit, but that's part of when to sell. Now, notice the data you get on sterling US dollar is probably going to be the same as what hedge funds get. It's not going to be very much different. You're not going to be able to buy dollars more cheaply than a hedge fund does. I mean, you might get a slight difference in variation, but when we're talking about trading, the rates are going to be pretty similar to what they get. You're not going to Thomas Cook and get ripped off, or your bank. You're going through a broker who's going to give it at the interbank market rates, okay? So given that you've got the same data, the question is, and you've got two decisions to make, the same decisions as any hedge fund manager, when to buy, when to sell, how come 61% of people are losing money? You might say, well, 50% losing money makes more sense, but why so many? Well, brokers are ripping you off, but we'll come to that in the Q&A section at the end. Now, notice how we've got two options here. We can sell. So when the markets are falling, we can make profits because we're selling at that high price and we're buying back to close our position at the lower price. And then we can buy at that price and we profit, obviously, from the rises. Now, a couple of interesting things I want to show you with this, and it's really important that you know, and I want to reiterate. Point number one is this, that the market, all it did was go down and then go up. It actually stayed the same. That's why we're trading, because we made profits on the way down. We made profits on the way up. I know it's an obvious point, but it's a really important point in this environment. Number two, this happens to be not a stock or an index. It happens to be a currency. Why do we want a mixture of stocks, currencies, and indices? Well, because they're not correlated to each other. So we can always be making a bit of money in something from our stocks or from our indices. You don't need to know macroeconomics to trade sterling US dollar. That's the mistake people make. Oh, I don't want to trade that because I want to trade stocks only. When you go to Starbucks and pay for your overpriced latte, they don't care where you made your money, whether it's in stocks, indices, commodities, cryptocurrencies, and I'll show you some of those to prove the point. In a second, I'll show you all of those because we're just trading the trends, buy low, sell high, or sell high, buy low. You are a glorified supermarket. You're basically selling and buying things. You don't care what they are. Okay, so that's the second point I want to make with that. You've got diversity of product, a lot of choice. Because you've got a lot of choice, you've got an increased probability of picking better quality trades. And that's the third point. Quality is what it's about. It's not about the quantity of trades. I don't want doing a lot of crap trades. It's about quality. And it's what I tell my staff in the hedge fund. I would rather you did fewer quality trades than a whole bunch of low quality ones, even if you made the same money, because I'd rather you work less hard to make that money. All right, and took less risk by having low quality trades. So what's a quality trade? We'll go into that. We'll go into how do we know when to enter and why did that come. Now, point number 4. Notice how when we entered, we weren't right at the bottom of the market. It was slightly after it. It was about here-ish. We don't have, and write this down, we don't have a crystal ball to see into the future. So we're not trying to forecast the market. We are riding on the coattails of the market that's already starting to move. We are followers of trends. We are not the setters of trends because we don't have enough money to move the market. So that's point number 4. Point number 5, and I'll show you again, like I said, with live trades in a second. Point number 5 that it's really important you know is this. Same trade, same data. Trader 1 makes £500 or $500. Let me know if there's anybody outside the UK on this webinar. It's a bit early for you in New York, but just in case there are, or there's people in the Middle East, which we often get, Singapore, Australia. Trader 2 does the exact same trade, makes £5,000. Trader 3 does the same trade, makes 5 million. Why? Well, the only difference is they've got more capital. And that's what we want to do with trading. We want to make sure that you learn the skills, because if you've got the skills to make 500, you've got the skills to make 1,000. You've got the skills to make 1,000, you've got the skills to make 2,000. If you can make 2, you can make 4. The point is, capital is a separate issue to skill. We're focused on skill. Raising capital from friends and family, that's a separate issue. We're focusing on the skill to make the money. Then we'll worry about the separate issue of, okay, Alpesh, how do I get lots and lots of money from lots and lots of people and set up a hedge fund? That's a separate issue, which we can worry about. When you're a billionaire or in the route to it, this is what your performance will look like. There's no getting away from it. It will and must look like this. It must look like this in the sense that you must have no big losses. So our strategy, which I'm going to show you, and that's why I'm building up to it, so you can see why the strategy is the way it is that I'm going to give you. And in the hedge fund, we have 10 strategies. I'm going to give you strategy number 1, our oldest one, which came back from 1997, which was thanks to Bill Lipschutz, global head of foreign exchange trading at Salomon Brothers, when I met him for the book. And I'll just share it with you. But why are you sharing it, Alpesh? Well, it was in the book anyway. And he taught me it. I don't own it. And he had no problems sharing it. It's not done him any harm. He was hedge fund manager of the year a few years ago. Nobody's put him out of business. Okay. So, and he wasn't the only one. They all had pretty much the same strategy, things that they do, and I'll share those with you. So big losses we're not going to have thanks to our strategy. Sadly, we will have small losses and small wins, because you do a trade and Donald Trump does he used to do a tweet. He does a Mastodon thing now, and the market dips a bit. And the trade you thought was going to be great doesn't work out because you don't have a crystal ball. And that's fine. That's life. That's going to happen. Out of 100 trades, you'll have some small wins, small losses. They cancel each other out, and it's a whole wasted effort. But that's how life is. And you'll have 20%, 15 to 20%, which will be big wins. So how do we get those? How do we put ourselves strategically in a position to get big wins? How do we make sure we don't get big losses? That's what it looks like if you're a billionaire or if you're just starting out. If it doesn't look like this, and with our apprentices, we ask them, and new people in the firm, we ask them, right, let's look at your stats. And if it doesn't look like this, we say, what the hell went wrong? Why have you got a big loss? Or why haven't you got a big win? And these are usually the answers. Oh, sorry, Mr. Patel. I insist they call me Mr. Patel. I missed that big win. It went on. Because we say to them, look, this went on a lot longer. How come you didn't get that? Capture it. They go, oh, I took my profits. I got just a bit scared. So we teach them how to get over that. And why did you get a big loss? Sorry, Mr. Patel, I didn't follow the rules. So we avoid that psychological problem. Well, then they get a slap and they're told, follow the rules, proverbial slap. And we show them how to get over their fear of getting out too early, right? I'm going to show you all of that in this webinar as well. I'm going to show you all of that. I'll give you all of that. The other thing I want you to know is this whole lie that you have to watch the markets all the time. That, oh, I've got to watch Bloomberg and this and that. We are not going to do the type of trading which requires a super brain, artificial intelligence, a supercomputer, and 1,000 analysts working for you. And the reason we're not going to do that kind of trading is you haven't got the money, We haven't even got the money in our hedge fund to be able to do supercomputers and 1,000 analysts and the wage bill that goes with it. So we're just going to ride the coattails. We're going to keep it really simple. We're going to ride the coattails. We're going to simplify because you're private investors. We're going to do 4 trades a week. Okay, that's it. Quality trades, though. And we're going to make sure you're only in front of the screen 15 to 30 minutes in a day. That's it. To place the trade and to close it. That's it. Max. And I'll show you a business plan where that will make you ample money. And the reason for it is when you spend more time, you get sold onto a position, your return on time invested decreases. Well, who wants that? You might as well work at McDonald's because your hourly rate will basically have dropped. And the other reason is you'll start either, if you're winning, doing poor quality trades because you'll think, oh, I'm invincible. You get the God complex. Or if you're losing, you'll start doing poor quality trades in revenge trading. One way or another, your psychology will mess you up. So I don't want you in front of the screen for endless hours. I want quality trades. I say to my team, as long as you get your work done, your 4 trades, I don't care what hours you work, right? And if you can't find quality trades and you have to work 24 hours, I tell my team, so be it, whatever it is. But if you get it done in 30 minutes, which is what we train them up to do, and they do, guess what? People, funnily enough, don't like working 24 hours a day. Then they can do what they want. They can go home if they want, put their feet up. Now, there's a lot of products to choose from. And what I'm going to tell you applies to all of these commodities, indices, forex pairs, because they all trend. They all go up and down. They've all got a price. They all go up and down. Shares, ETFs, cryptos, treasuries. Now, I always get in this webinar, no matter how many times I say this, somebody will turn around and say to me, does this apply to global indices then? That means they're not listening, and I usually chuck them off. If they're not listening or they've got too low IQ, then well, why not chuck them off? It's not whether you're right or wrong, but how much money you make when you're right and how much you make when you're wrong. And that's what I'm going to explain to you. Before I go into this chart, let's just look at some of those live trades, and let's, with those live trades, explain to you what the hell's going on and what you're going to learn. All right, so let's look at this. This is Euro US dollar. Now, if you're on my webinar last night, you'll know these are the positions from last night. Okay, and I explained, well, we got one, which by the time we got in, okay, it made a small gain, nothing to write home about. And that was, by the way, this is Euro US dollar. Each one of these bars is 30 minutes. And we're only looking from the 8th of November till today, which is the 10th of November. So we're only talking this many signals in 2 days. You don't have to take them all. That one made a good gain. This one didn't. It made a loss. Okay, so, oh my God, losing. This was a small gain. This was a big gain because it was sell there, buy there. And we're short at the moment from last night. You'll remember if you watch this, this is one we were watching, and this is where we are. Now, I'll explain what this is, which is the stop loss, and why this is the add winning positions. I'll explain that in a second. Now, what I want to explain with this euro dollar is I don't know what's happening in the Eurozone. I don't need to know. Okay? We're just trading. We don't care what we're trading. I don't know how difficult it is for people to understand that, but they'll always come back to me, oh, can't I do stocks? And the reason is, I know what it is. It's because they want to read a whole load of stuff on the macroeconomy or on Apple or whatever else. They can't help themselves. I don't know. Maybe they're trying to escape their spouse and say, oh, sweetheart, I need to be in the den for a few more hours because I'm trading. Leave me alone. Maybe escape their kids. Well, this isn't the answer. Okay, so here we've got Apple, 15-minute bars. Each one of these is 15 minutes. That didn't get us anything. This got us a nice, healthy gain. Okay, and that got us a nice, healthy fall. Fantastic. Why is that important? Well, because the price from here to here went nowhere. And also, because we traded it, we made profits on the up, profits on the down. So, and I've got a long-term long position in Apple. So is my 4.5-year-old son in his ISA. And so this short paid for it because we made a profit from Apple falling, which that profit pays for some of the long position. In fact, we could take that profit and buy more Apple if we wanted for the long term. That's hedging, hence the term hedge fund. The short term, over 24 hours, we were able to short it, profit from it as it dropped. And that pays for the long-term investments. That's ideal. Okay, so that's another reason to have a mix of products. Currency, I just moved from currency to stock. Let's go to Amazon. Amazon's got a similar kind of pattern. Fell short. Fantastic. Easy. We've got a long-term Amazon position. What about the S&P 500? Well, currently we're short. You can see why. Now, at the end of this webinar, that might change because all of a sudden the momentum might change. And I explain how we get that momentum there and how we know when it's falling. Okay, but we are short on that at the moment. And you watching it last night, you'll know this is the follow through off the back of it. So you can see what we started off with on those trades and where we are. Now, Bitcoin's been having an absolute bloody nightmare. Okay, so we've had with Bitcoin, whoops, oh, can't quite see it. Let me just move that across. Right, you can just make out there was a sell there. What day was that? In each one of these bars is 30 minutes on the case of Bitcoin. Now, I'll talk about trading instruments in a second. That was 10th of November. So what's happened in just a couple of days? Well, that was a slight profit, but then that was a loss. Oh, God, you're rubbish. Well, wait a minute. That was a gain. That was a gain. That's been a gain. And it's suddenly just given us a bit of a buy. I don't think that'll last. We might even get out of that prematurely. But we've had all these buys. Now, you might say, well, why did you have any losing trades at all? Well, that happens. And as George Soros said, it's not about how much you make when you lose. It's not how often you're right or wrong. It's how much you make when you lose. Sorry. It's not about how often you're right or wrong. It's about how much you lose when you're wrong. Very little, because we're going to look at the strategy and why we keep those losses small and no big losses, and how much you make when you win. Okay, and how we add to winning positions to make sure we win even more when we're on a win. All right, that's what it's about. And we're keeping it really simple. The reason we're keeping it simple is because people overcomplicate this thing. I'll just, before returning back to the slides, and we'll come back to these live trades later, but this is where we are with the FTSE. Now, there's been a lot of talk about the FTSE and, oh, is it undervalued, overvalued, and blah, blah, blah. I don't care. What I care about, this is the FTSE, and it is, each one of these bars is 4 hours, and you can see that's the buy, and this is where it is, and it's been a nice little rally. Now, you might say, oh, Alpesh, is that because of this? No, we bought it because it was going up. Well, why? I don't care why. I don't care why. We are following trends. So what is it about what the price was doing here that suggested to us at this point there's an increased probability, not a certainty, of a price rise? And what was this yellow line again? And why are you adding to your position here? I'll explain all of that. And that's what keeps it really simple. So I've given you the overview. Now let's go into building the strategy and doing the business plan. Building the strategy is this. Whoops, is this. Okay, let me get the pen out here. The pen. And you might, like I said, want to take photos of this. I'm going to simplify. The strategy is such that when we get a loss, like we did at point D, the losses are small in size. Losses small in size, short in duration. That's the element of a good strategy. Write that down. SS. Small in size, short in duration. Small in size, short in duration equals good strategy. SSS, strategy equals small in size. And well, how, Alpesh? I'll come to that in just 1 second. How do we make sure we get no big losses? All right, and that makes our life a lot easier. If I said to you over the last year, from all your trading you did, if I could take away your big losses, would you be more profitable? You're all going to go, yeah, that's what I'm going to do. Then we'll look at how we add to our winners to make more money. Okay, because it's also, of course, about making money. So where is that? Here it is. So this part, how do we know when to enter? Like there, we didn't enter at the bottom because we don't have a crystal ball. How do we know to enter there? That's to do with the entry, and I'll come to that later. What I want to do first is the stop loss, which is this point here. Every single hedge fund, every single rich, wealthy hedge fund manager that I interviewed in this book told me something which I never knew. And they all knew I went to interview them because I wanted to get rich. Why else would I interview hedge fund managers? All right. And this is in 1996, 97. New York, Chicago, London. Financial Times published the book. It changed my life. Of course it did. They became my mentors. And I was able to set up a hedge fund because I knew what they were doing. Does it impact them? No, they don't give a damn that I've got a puny little hedge fund. What do they care? All right. One was the global head of foreign exchange trading at Salomon Brothers, the biggest Forex trader in the world. They saw me coming in, you know, in my mid-20s. They didn't care. They didn't see me as a threat, and neither should they. Right. So why is that stop loss there? Every single profitable, rich, filthy, stinking, rich hedge fund manager did this practice. I'm going to share it with you. And it's what's critically important. One, when they were setting up that stop loss at point B, they had whatever it's currency, stocks, whatever. We're talking about trading, not investing, remember. They had what's called volatility-based stop loss. What does that mean? The more volatile the market, further away the stop loss. So you're not stopped out by noise. Okay, you might do that by eye, or you might do it by a mathematical formula like 2.75 times the average true range. You can look at what average true range means in your own time on Google. So that's noise. This moving up and down is just noise. So they take, say, the last 14 days average of how much it moves up and down. So it moves up about 10 points up and down in a day. So let's put this 25 points away. Do you see? Okay. Volatility-based stop loss. The more volatility, the more noise, the further away the stop loss. But you might then say, well, wait a minute, Alpesh, that means you're going to lose more money if the market's more volatile. No, because they also do volatility-based position size. In other words, they reduce their position size if the stop loss is further away. Now, that's ingenious, and it is the secret to becoming a billionaire in trading. If you don't believe me, I will argue it. Well, I'll have all the evidence of an army of hedge fund managers who bloody well do it. Okay, not just them. AHL, Man Groups, AHL, Winton, Aspect, they all do it. All right, they all do it. Brevin Howard, that's what they all do. Why? Well, because it just makes perfect sense. It means that if the market is more volatile, they're not risking losing more money because their position size is reduced. That's the first thing. The second thing is the stop loss is bespoke to the market conditions. How bloody ingenious is that? The third thing is they can start small because guess what they're going to do? On the flip side, they will not open a full position on day one. What they'll do is they'll open that one position here. Then if the price goes to point C, which is just the mirror reflection of the distance from A to B, right? Then what they'll do is they'll add to that position. They'll take some of the profits they've made as the price has risen, and they'll add another position, same size, which is skyscrapering, or half the size, which is pyramiding, and they'll let that run. Now, write this down. Winners add to winners. Write that down. Winners add to winners. Losers add to losers. Never add to a losing position. I didn't come up with that. Paul Tudor Jones, billionaire hedge fund manager, did. If you want to be a billionaire, follow what the billionaires do. Losers add to losers. Right? That's what he said. We never add to a losing position. Winners add to winners. We only add to a winning position. So it means we can start small. And if we lose, we'll only lose a small amount of money because we start small. And if we win, it's fine because we're going to add to our winning position and make more money. So we'll make more when we win than we'll lose when we lose. And that's why 15 to 20% of our trades, when the trade does go absolutely escapes, we'll make lots and lots and lots and lots. Simple as that. Okay. I'm going to put some polls up whilst we're on this, so you'll sort of keeps you entertained on all of that. Now, that's straightforward, isn't it? Yes, I think it is. Let's see how that translates into actual real world trading. Let's take JP Morgan and banking, right? Well, banking stocks have been rather cheap, according to our data, but that's not relevant. What's relevant is we've seen the trends. We got an entry there. Well, the second one didn't do anything for us, and we're currently short on it. Well, wait a minute, Alpesh. How can you change your mind? Here's an important lesson. From the 21st of October to be long JP Morgan to being short on the 9th of November. Because we're trading. We're trading the short-term trends. That happens to be each one of those bars is 1 hour. So here's some more important lessons I want you to learn. One, it allows you to change your mind, which is important, so you're not sold onto anything. Okay, so you can change your mind, write that down. That's a great thing about trading. The second thing is, hang on, 1 hour bars means you can still do this with a day job because that's how many signals you get if you're looking at one chart in 1 hour bars. And you're not looking at one chart, you're going to have a look at 24. So you're going to get a lot of signals. Okay, which ones you take is up to you. So you can be a day jobber. You can keep your day job. Don't just resign today because you watch this webinar. Okay, you can keep your day job for now because there's ample signals. And in fact, I don't want you just watching the market because you'll second guess what you're supposed to do. I'd rather you place the trade and then walked away and let the market do its thing rather than you second guess every 2 minutes. Okay, we'll come back to some of those trades in a second. We'll come back to, we've got Ripple, we've got Microsoft to discuss, Dow, and so on. Okay, so Alpesh, put this together a bit. Stop losses you've covered, entry you're going to cover, limit order is a take profit order. Okay, if you're a beginner, I would suggest as a beginner, you can just put a fixed stop loss at B and a fixed take profit. You can say to your broker, it's really simple. I've got an entry, buy now, and then stop loss at point B, limit order at point C, and then you walk away. That's it. That's left with the broker. It's done. If you're intermediate level, then don't have a take profit order and just have a trailing stepped stop loss at point B. Okay, simple, right? I won't go into advanced for the moment because most of you won't need that. We can do that in the Q&A if you wish. Mind, like I said, if you're following the signals, I don't want you in front of the screen, so your psychology isn't messed up by second guessing. When we've got apprentices in my firm, you know, why didn't you call him John Smith, why did you get a big loss? Oh, I didn't follow the rules, Alpesh. I thought it was going to come around. So your mind was the reason. Okay. Why didn't you get the big win on this when the trends just went up and up? Oh, I didn't want to add to the win, or I got a bit scared. I took the profit. So your mind's the problem. That's how we remove it, by having more and more automation of these things. Okay, still needs the human trader to select the right trade. Don't just follow it like a black box. We want the smoother trends. Okay, now the human brain can find those a lot better than computers can. Once we've identified this is worth looking at, that's what our signals do. So this is worth looking at, and I look at it and go, wow, it's a really smooth trend. I like that. Yeah, let's go for it. Or, yeah, I'm not feeling it. Leave it, right? Rather than just a black box. How much money to put in? We'll do the business plan in a second. And we've already covered additional positions or winners add to winners. Selma, okay, that's what it is. Here's a flow chart. Take a picture of how you're going to do it. You're going to scan 20 to 24 instruments. Which ones, Alpesh? Well, write this down. Take a picture. Here's a good start. Now, I've reduced it from 20 to 24 because we're on a webinar and there'll be too much to see on the screen. Oops, sorry. Let me just... Now you can take a picture. Okay. And also on my free Telegram channel, we show you which positions we're monitoring each day. So you can always follow those as well. And that's probably a good start. Or you might pick your own from these. You might say, no, I'm going to pick Oats futures, or I'm going to pick Visa, Adobe, MasterCard, Juventus, Ferrari, Sterling. Okay, it's up to you. If there's a signal and the trend is smooth and it's got a historically good hit rate, in other words, yeah, it's smooth and the signals keep picking up the trends nicely, then if the price is near where the entry was signaled, go for it. Enter the trade. All right. If it's not sent you a signal, then just go back to the start and look at the next one. It's simple. It is that simple. People overcomplicate it. So what's left? There's still quite a few things for me to discuss. One of which is, yeah, well, Alpesh, you haven't told us the business plan of how much could be made, how much money we put into a trade, and how do we get those entries, and how do we these entries to go short there and to go long there, where you think there's going to be a trend. This is, by the way, Microsoft 30-minute bars. Okay, so this is our position at the moment. Now, that stop loss nearly got hit, but didn't, which, I don't know, says a lot either about our stop loss approach or luck and chance, but it didn't get hit, thankfully. Okay. So if that's where we are with that, let's do the business plan and the entry strategy on that. By the way, can I, right at the end, in the last 10 minutes, I asked this on all my webinars, tell you something we've launched from my hedge fund. We've spun out from the hedge fund some financial technology, which we think is a billion-dollar game changer, because there's millions of traders around the world spending trillions each year on the markets, and we think our tool is something which we can float on the stock market eventually, and that's my goal. I tell you in the last 10 minutes. You don't have to stay for that if you don't wish. It's just telling you personally what some of the things we're doing. Okay, so put it yes in there. Okay. Ross says CPI data just out. Don't care. We're not trading around it. And so I don't really care whether it's out or not. On that, one of the biggest hedge funds in the world has released a video to justify how they make money. You might think, well, why would a hedge fund ever tell you that? Well, we've got to tell our investors anyway. But also, strategies are not the scarce resource. If you want trading strategies, go to Oxford University Maths department. They'll give you lots of people with trading strategies. Capital is the real problem. People not having enough money to trade and not knowing the strategies. So demystifying it's not a problem. The trading we're going to do is the same AHL does, which is trend following or momentum trading. It is also what all these people do, which is what got me into it. It was just ridiculous. How else does a boy with that silver spoon born in Armley in Leeds get to these kind of levels? Well, this was the quickest way because the market's a great leveler. John W. Henry owns Liverpool Football Club, by the way. Paul Tudor-Jones, I've mentioned already. Man Group is British, and so is David Harding, who owns Winton Capital. Okay. British as well. So he's sort of my favorites over there. They all do trend following. What's trend following? Wait for a trend to start. Okay. And then get in at the start, wait for it to exit. I'll show you some of their slides from their own presentations in a second. That's it. That's all they're doing. And that's all I'm teaching. And trend models is something which, banks investigate, obviously. and come to their own conclusions. Winton Capital, David Harding's outfit, that's one of their slides, not mine. It's one of theirs. Trend starts here. We're not trying to forecast the bottom, which is what idiots will tell you on social media. There's a bit of a lag, and then we're looking to buy. Bit of a lag, then we're looking to sell. Speaking of social media and the internet, and this really annoys me, and that's why I do these webinars. If somebody is telling you you have to use their broker, they're ripping you off. Okay, if they're saying to you, we're going to charge you a subscription for our software, they're ripping you off because they're making you think, oh, it must cost. Obviously, they've got staff costs and all of this. No, they're just ripping you off. They're charging you a subscription. They're forcing you with their own broker, which means they've got a conflict of interest because the broker's taking the other side of the trades. They know what you're trading. You're going to lose money. You might make a few winning trades by luck so they can quickly do the video review with you and then say, hey, if they also say to you £1 a point, you're going to lose money. It's too large to start with. Too large to start with, unless you're a millionaire. But they want you to chart with £1 a point, preferably £2 a point, so that they can take more of your money quickly. Okay, so just don't fall for all that nonsense. What else have we got? Well, this is a typical, I did a typical month. This was pretty much this time last year. Okay, about 11 months ago. And this is where it's at. Okay, now, why aren't they all wins, Alpesh? Why have you got any losing trades? Because there are. There's 1, 2, 3, call it about 4 losing trades, because I think that one, this one in the middle was as what? Well, can't do it there. There's one here. Okay. So hi, Alpesh. Wait a minute. You've therefore got red 1, 2, 3, 4 reds. One of the reds isn't showing, and you've got 1, 2, 3, 4, 5, 6 blues. So you've got out of 10 trades in a typical month, you've only got 60% winners, 40% losers. You're only a little bit better than a coin. Yeah, that's fine. Because when we win, we usually make more than when we lose. It's as simple as that. That's all it is. It's not about how often you're right. I'd love to be right all the time. And people who ask me, oh, how old are you? How often are you right? How often are you right? How often are you right? Actually, as George Soros has already said, and I'll prove to you again, that bit's irrelevant. We'll show you how often we're right and we're wrong. Worst case, we're wrong 70% of the time out of a random 100 group. Best case, we're right about 70% of the time out of a random 100 trades. There's the variance. If you know your maths, you'll know how these things are. Okay, so it's a big variance. So what's meaningful? Well, it's actually how much money do you make on average, and I'll break that down and show you the chart on that in a moment, show you the table rather, and data and statistics on that in just a moment. Okay, that was my mentor. He was in my first book, Bill Lipschutz, global head of foreign exchange trading at Salomon. So he was the biggest forex trader in the world. He was pretty much the second person I interviewed. I interviewed him in New York and in London. Lessons in trading strategy from the world's leading traders. There he is. Warren Buffett was his chairman at Salomon's at the time. Bill then set up How to Sage Asset Management, his own hedge fund. And he was hedge fund manager of the year about 2 or 3 years ago. So delighted that it was, it's thanks to him. I have all of this anyway, because I went out and met him. Now, I know why you're all here. By the way, this is not an endorsement for SpreadX. I don't know who they are. I never used them. But this was data they provided somewhere on the internet, and I found a few years ago. You're here because you want to be that lottery winner who gets the £1 million, and they want to seduce and allure you with that as well. Of course they do. And they'll say the average profit from top 100 traders was £96,000. Of course, there's profits to be made. That's not our business plan. I'm going to give you the business plan and the entry part of the strategy in just a second, and then we're going to look at more live trades and do a Q&A. Our business plan is going to keep it simple. We're going to aim for 1K or £500 to 1K per month. What? Why so lame? You're learning a new skill. It's like learning to drive a car. I don't want you going on the motorway and blowing up and then saying, oh, God, car driving is really dangerous. Nobody should be allowed to do it. No, if you do it properly and learn properly and slowly in a safe environment, then you can go one day and be a Formula One driver. But I don't want you starting out like that. Okay, so we're going to start small. I'm telling you the exact opposite of what everybody else tells you, because this is how we train them up in our fund. We don't set them off loose with other people's money and say, go play the markets and put me out of business in 2 minutes. No. So £1,000 per month is going to be our target. None of these stupid numbers, but I know those are your ambitions. I appreciate that. I'm cognizant of it, as it were. There it is. So what does the plan look like? What does the entry strategy look like? These are some important numbers to write down as well. 15 minutes a day, you're going to scan 12 to 20 instruments on one screen. You don't need multiple screens. You want multiple screens, go to Amazon, pay £100. You can get lots of screens and fill the big man trader all you want. 1 trade per day, okay, 5 a week, 20 trades per month. That's what we're going to aim for. Now, what do you mean scan? So let's say your setup looks like this. Remember, all this data is live, real time, and free. Free, okay, broker independent, free, broker independent, it's MT4 platform, so it's all free. And you're going to scan those until you get an entry signal. How do you get an entry signal? I'll show you that in a second and what the rules are for it. The stop losses and all the other bits we've covered. You scan that, takes 15 to 20 minutes, find 1 quality trade a day, boom, place the trade, job done. Next, go to work, okay? Do whatever you guys do. Beyond that, right? It's that simple. So let's now work out the next simple bit, the business plan and then the entry strategy. Those are the 2 final parts of the webinar. So what's the business plan? What does that look like? By the way, those of you who think the FTSE is going to continue higher, 43% of you do. The rest are either not sure or think it won't. Okay. I'm going to put another table up here, given that we just had the US midterms. Will the Dow be up from today's levels? It's not long to go, a couple of months to go. Will it be up from today's levels? So I'm going to ask you that question. Now, what I want to do, let me show you one more live trade, because we're going to dip in and out of these. I like doing the live ones because it just ties in nicely. Did we do US Dow 30? I'm not sure we did. I can't remember if we did the US Dow 30. I'll probably come back to all of that later. In any event. Okay. Oh, somebody had said CPI figures, didn't you? Okay. And I said, I don't care. Sterling US dollar then. Boom. Okay. That could have gone either way, but it didn't. It went this way, which reminds me, given that massive shoot up, I better, we've got some profits to add to on this. So that's okay. That's, you can see it live on screen. What happened? All right. So this is what's happened. You mentioned CPI. Now, Alpesh, did you trade the CPI? No, I didn't. That might have hit a stop loss or something, but well, highly unlikely to. Where was the clue that it was more likely to go up? Well, because of that setup. What's that setup? We'll talk about entries in a second. So there it is, dawdling along, and boom. And that is a massive leap up from 1 spot 13 to 1 spot 15. That's 200 basis points. That's phenomenal for us as well. So yeah, you guys have made me a lot of money today. I'll share it all with you. That has been a phenomenal trade. If you've been following me on LinkedIn, sorry, I'm getting distracted now, because if you follow me on LinkedIn and Twitter, you've seen that I've been putting my sterling trades against US dollar because it had fallen so much. So I'm really pleased with this. And fantastic. So thanks. Now, that wasn't to do with CPI. It was just because we were following a trend. You might say, well, what if it went the other way? Well, if it fell and went the other way, it probably wouldn't have fallen too far because the trend was clearly in this direction. Well, I say clearly, sorry. The trend was in this direction, not clearly, but it was in this direction. We were already long. So thank you all very much. Those of you who joined yesterday and started that, because I know some of you I onboarded last night who bought the indicator and started it. And I know you were looking at sterling US dollar for that reason. Congratulations to you guys. Well done to you, because you've had a really good day. They're not all like this, by the way, just in case you know, as well. Right, so let's get back to it. Now, business plan. Is any of this worth doing? That's my mum, by the way, makes an honorable visit and all this. Is any of this worth doing? You know, are we going to make enough money? Well, if we start off today, okay, you might say, hang on, you didn't look at the FT. You're doing a webinar during CPI numbers. What the hell's wrong with you, mate? Well, look, there, that's the FTSE. Those of you who looked at the FTSE earlier. Now, when we looked at the FTSE earlier, it hadn't jumped up. It's jumped up now. Those of you watching this live, there you go. So congratulations to you guys. Now, I should say, for the people who signed up yesterday and have done the FTSE trade, there's some of you wanted to do FTSE particularly, and there's some who wanted to do GBP USD, and we did it last night. Others were not set up yet. It's not always this fantastic, obviously. Delighted it is. I don't want you to think, wow, does that happen every day, Alpesh? We just get windfalls? No. Okay, before people sort of get carried away and think, that's it, I'm going to send my resignation notice in to work. So it's just so happened that I think we should do more at 1 o'clock in future. Okay, So that's where we are with that one. Let's go back into the business plan. Let's look at the business plan. All right, and it's this: how much money can you make? Trading is like driving. When you're driving a car, you've got the rear view mirror, the steering wheel, the accelerator, the clutch, the brake, a lot of things to monitor. When you're trading, you've got the same problem. Stop loss, when to enter, when to exit, how much money to put into a trade. There's multiple things, but you learned to drive, didn't you? Similarly, you can learn to trade. And like driving, you're not going to go on the motorway in a Formula One car. You're going to start off slow on a demo account, okay? And that's why this fat picture of me driving. So, and the analogy was Bill Lipschutz gave me that analogy. So let's look at the business plan first to decide whether any of this is worth your while and if you're going to make enough money. And secondly, let's look at how to find the entries. Okay, so we're going to look at how to find the entries in just a second as well, of course. So let's just have a look at those parts of those entries. Now, what do we get there? Maximum loss, 1% of total capital. The maximum loss, Bill Lipschutz said to me, now he said to me, when we're doing the business plan, your maximum loss should be 1% of your total capital. Okay, that's what he said. And he said, you don't have capital at the moment, Alpesh, because when I first met him, I didn't have the capital. He said the capital will come later, but this is a business plan looking into the future. So assume you've got the capital already, which is, let's say, £20,000. You don't have that today. You'll have it. You're trying to determine with this business plan whether or not to do this as a side gig in your retirement, or because you're a professional dentist, lawyer, accountant on the side, because you're cash rich, time poor, or because you're retired, or you're looking to plan for retirement, whatever. You're thinking, I want to do something on the side. I want to learn about this. How do I do it? So we'll assume you'll allocate that money in due course. Initially, you'll allocate nothing because you're going to do a demo account. So the maximum loss per trade is 1% of £20,000, which is £200. Assume the win-loss ratio is slightly better than a coin. After all, we're looking at momentum. We're looking to do this as a result of what we're doing with all of this. Trading and strategies. So surely, if that's the case, then we should be looking at something which gives us a bit more than 50-50 in a coin. So assume we make a bit better, not 70% right, not 80. We don't have that kind of pressure, just 60% of the time right. Fine. Average loss, £200. As I said, average win, because we're adding to winners, will be bigger than our average loss. That's £300. See, do 100 trades. So Bill's writing this. I'm writing this down for the book, and I'm sort of there at university. I'm going, okay, Bill, this makes sense. And then I do the maths. I say, hang on. That means 6 out of 100 trades, I'll make £18,000 profit. I was over the moon. And he said, yeah, what about the losses? I said, yeah, but even if you take the losses from the profits, that's still a net profit of £10,000 per 100 trades. £10,000 per 100 trades. So that being the case, £10,000, the pound is absolutely belting it up. I just need to make sure. I know my team will be on this because they know whenever I'm on a webinar that they've got to do this. But that is more of a windfall than I expected today on sterling US dollar. That's absolutely a phenomenal rise up within just such a short space of time. So fantastic to see that. That's the highest it's been since about September. So anyway, really pleased. We're at 1.16 now on that. So I said, Bill, I want to leave university. This is amazing money. By the way, this is another important point you're watching. Isn't it stupid what trading is? Here's a man standing with you on a computer screen and he's making money whilst talking to you. I mean, capitalism's awful, isn't it? I was giving a talk at Eton College the other week, and one of the sister schools, a girl from a sister school, because Eton's all boys, said to me, well, capitalism means, her implication was capitalism is just awful and socialism's better. Yeah, I agree, but I'm afraid that's the system we've got, and socialism doesn't work. So this is the stupidity of it. We'll make money from this. Now, hopefully you'll use your money to do philanthropy, do donations for good causes and all the rest. If you saw me on TV last Friday, you'll see what I donated to, committed to it on air and sent the producers the donation, all the rest. The point being, do something with it once you've secured your future. But it is stupid. It's no good way to earn a living, buying and selling off the back of numbers on a screen. But that's what it is, and that's the world we live in. Not that, you know, that's how it is. You can make it more just with what you do with your profits. So I said to him, I've got £10,000 off of 100 trades. I want to drop out of university, Bill, and I just want to do this. And he said, well, hang on. I said, no, Bill, I won't hang on. 100 trades I could do in a week. I'll go nuts. I'll bang my keyboard all day long. 50 trades, 50 weeks in a year, 100 trades a week. That's 5,000 trades per annum. I'll make $500,000, right? As you can imagine, as a young student, I got carried away. I know what you're all thinking, and you should, and Bill said it as well. No, we're not going to do 90% of that, Alpesh. We're not going to do 3/4, 2/3, even a half of it, Alpesh. We're not going to even do a third, a quarter, or a fifth of that, Alpesh. We're not even going to do 15% of it. Let's say this business plan is ridiculously over-optimistic and you only achieve 10% of your business plan. That's still 50K a year. No, you're not even going to do 10%. Let's say instead, as Bill said to me, keep your day job. Let's just be cautious. Keep your day job, 100 trades per 6 months. That's still, guess what, roughly one a day, which is what I told you earlier on. Whereas people can only do 10 a day. No, one good quality trade a day or 5 quality trades a week. Some people batch it into Fridays and just place them on Fridays or Monday mornings. 100 trades per 6 months, 200 trades per annum. That's still £20,000, which is not 10%, but is about 4% of our business plan. Okay, so let's say you do 4% business plan. Nope, over optimistic. Remember, our goal was 1K per month. So now we're really happy because at about 2% of our business plan, we hit our goal. So even if we're wildly optimistic, it's still a good business plan. It means it's a no-brainer. It's worth doing. This was my calculation. Then I said, I'm leaving the bar. I'm leaving being a barrister. This is what I want to do because this is a business plan right there. And that was a change of career. So you should ask me now, Alpesh, if that's true, why isn't everybody rich? And I asked Bill that. And he said 3 reasons: bad teachers, bad mentors, bad strategies. So let's go into, before the Q&A, the strategy for entry, because that's the final part of the webinar. There's my mum again, honourable visit. 100 trades per 6 months, 200 trades per annum, £20,000 per annum. No. Remember, I said 1K per month. If you've got the skills to make 1K, you've got the skills to make 2. If you can make 2, you can make 4. That's how it works, okay? That's how it works. Now, I don't expect every month, this month's going to look bloody good. I don't expect every month to just have given me that massive spike up. I mean, that's pretty much unheard of, which is why I'm happy. I actually want to get off the webinar now and just speak to the rest of the team and just say, what the hell just happened, guys? Because we weren't expecting that. And you might say, hang on, Alpesh, and there's an important lesson for you. What do you mean? You didn't see that coming in the future? No, that's my whole point. We don't know. We position ourselves to be in a position to be lucky. That was lucky. You could call it lucky or skill, but we didn't know that was going to happen. If that was going to happen, I would have told you, wouldn't I? At the start, guess what's going to happen in half an hour? We're going to get this massive spike up in half an hour. By the way, how's that translated into others? Ethereum, interestingly enough. Right, that was the long position. And you know from last night, we had the short, we got the long signal earlier today, and that shot up as well. So it's not just, I mean, obviously it's because it's against the US dollar, but you've seen that come in as well, interestingly enough. Okay, similarly, sorry, with Bitcoin. We'll come back to some of the live trades in just a second. Right, so how do we do it? If that's the business plan it's worth doing, how do we do it? This is what our trading strategy is. So I'm going to give you the trading strategy, and then we'll do Q&A. Trading strategy, we want to be that guy. That's who we are. We're riding the coattails of a trend. The trend is moved by this guy in the big bank. He might be at Goldman Sachs. We're that guy. That's all it is. That's all I am. That's all it is. Okay. And how do we find that momentum? So I said to Bill, look, I can't afford big AI supercomputers because I was only at university. So how can I do this? And he said, well, the easiest strategy for you to do when you're poor, because I was a student, and you don't have the computing power, is just to do trend following momentum strategies. It's simpler. You don't need to read lots of books. You won't have the time because I was at university. You're just trend following. You're basically taking a little bit of time, placing some trades and going away, and entry, buying low, selling high off the back of a trend. You're not doing merger, arbitrage, or options trading or anything else, but you can still use CFDs, spread bets, futures, options, whatever you want on these trades. I said, well, how am I going to find the momentum. And he said, you measure how close the price closes to the high. It's a bit like those TV shows. Oh, I've got 50, anybody give me 60. I've got 60, anybody give me 70. I've got 70, anybody give me 80. That's momentum. If the price is closing near the high, it means in the next period, there's an increased probability, but not a certainty, it'll continue higher. I said, okay, a bit like this. I said, but wait a minute, there's lots of ways of measuring that. You could look at higher lows. Okay, that's one measure. You could look at higher highs. That's another measure. Another measure is the price closing near the high. And he said, that's fine. We're going to do what all hedge funds do. All hedge funds have the same approach, which is one, they don't just look at one indicator, they look at multiple indicators. So we'll look at not just higher lows and higher highs, but is the price closing near the high? Multiple indicators. But we won't do it the way the textbooks do. No hedge fund does it the way the textbooks do. Otherwise, they wouldn't have an edge. Okay, so I'm going to give you how we do it. The second thing all hedge funds do is not just multiple indicators. So they've got confirmation. They've got okay, they don't just look at one thing and say, oh, that must mean this. They say, right, that's that. Is that evidence corroborated by another thing and another thing? Okay, and then they do it across multiple timeframes. Multiple timeframes are like this. Imagine when you're sitting by the seashore. Do you know sometimes a wave comes in, tickles your toes. The next time it comes in, it blows you over. How's that? That's because of how multiple timeframes work. When something is in let's say the 1 hour time frame, just a buy signal, it will be a big move up if in the next time frame along, the 4 hour, there's also a buy signal. In other words, all the money, all the waves are moving in the same direction. They're coming on short. If they're moving in different directions, they cancel each other out and you get a small move up and then it falls back again. So you don't get much of a move, okay? Now, that's the first thing. That's the first thing. So we use multiple indicators across multiple time frames. So if you're trading the 30-minute bars, you look at the time frame in the 1 hour. Now we have our software to do that for us, and I'll show you that in a second. That's what we created and spun out of the hedge fund. And the third thing we do is PC, which I'll come to in just 1 second. So I said to Bill, how do I do this? Given that I'm a poor student, I need to do all of this for free. He said, yeah, use indicators which are widely out there, which measure these things, but don't use them the way the textbooks do. For instance, he said, use the MACD, which is a measure of momentum. You know, is the price closing near the high, higher lows, higher highs, and use the stochastic, which does the same, but don't use it the way the textbook do. So use multiple indicators, those two, across multiple time frames, but not the way the textbooks do. In other words, wait to see if they're flat to rising. That's not how textbooks do it, because that'll avoid certain problems that those indicators have with being lagging, and it'll give you an earlier signal. So I said, okay, those two indicators, multiple time frames, flat to rising. What's PC? PC is price confirmation. It's this. Does the price, this, make a 2-period high, i.e. the highest it's been compared to the last 2 periods, 1, 2. See, as soon as it went up here, it was higher than periods 1 and last 2 periods. So if each one of these bars was 30 minutes, then that was higher than it's been, the price is higher than it's been in the last hour. Okay? Now, I said to him, well, do I have to visually do this? And he said, yeah, you set up the computer system. So you're looking at multiple indicators, multiple time frames, flat to rising, price confirmation. Now, of course, we have the computer to actually tell us those signals, which is what's been done all over here. If you take something like, I don't know, Royal Dutch Shell, okay, because we haven't looked at a stock for a moment. Royal Dutch Shell, you look at something like this, what happens? Okay, it's fallen. Then it's risen. But the point is, at that point, there were multiple indicators. Well, it's a fall. So flat to falling across multiple time frames, and the price made a 2-period low. The computer system tells us, it scans. You might say, well, wait a minute, what does it scan? Well, see all of these here. Let me see if I can show. Let me just move that out of the way. See all of these? It can scan all of these currencies, plus all these stocks, Amazon, Baidu, Bank of America, Google, Alphabet. Now, don't say to me, oh, but I only want to do stocks. Foreign exchange, stocks, commodities, they're all the same. They're just prices. They're all bloody prices. Coffee, rice, they're all prices. Okay, it's all they ever are. And it doesn't matter which of them you do. So I said to him, okay, this just makes sense. Now we've got the entry, multiple indicators, flat to rising, multiple time frames, price confirmation of a 2-period. That was it. Now, we used to have to do this manually. When I used to explain this, this is at Bloomberg. When I used to do a show at Bloomberg, and a few years ago, we did a big event there. This was relevant for students. We had in the audience full-time moms, full-time plumbers. Well, I guess all mums are full-time if they're mums, whether they're working or not, but you know what I mean. Professional traders, we had school teachers, business owners. Let me know what jobs you do, okay? Thank you, Ravi. Thank you. You are an absolute star. I'm going to broadcast that to the room. Professional traders, school teachers, in-between jobbers. We think we created something amazing by creating this indicator. By the way, yesterday, it was announced my old politics tutor at university passed away, Sir David Butler. Sir David Butler invented the swingometer. He created a load of data and was able to make it easier for people to see. It never occurred to me that what this is I've taken a load of data. It's like the Google of trading. Google is an information source. It scans the internet for information and then tells you what you want to know. This scans all those prices and tells you what you want to know. I never thought that I'd actually created a swingometer for trading, basically. But that's what it is. And David passing sort of reminded me of that. And I guess, I mean, not as great as that man was, but that was sort of really nice and really great to have done that. And there you go. That's the FTSE. It's still holding up on those positions. So it's been what a great way to end the weekend. Well, end the week. Well, it's Thursday, but so I developed this when I was at university. Red Carnation, last exam. Sorry, I look a bit of a div. Perfected the strategy, won awards. That's me winning an award in the Financial Times. He then asked me, would you like to write your own books? I'll show you how to download it in a second. Give me a second. And I said, yeah, I want to raise my profile. Now that I've won the competition in the Financial Times to forecast the market, I want to raise my profile. TV. I wanted to raise my profile because that allows me to raise capital for my hedge fund, which is what I plan to do once I won that competition. I said, why haven't I got a hedge fund? This is me explaining oil. And Sally, luckily, had remembered in January, I'd said it was going to go to all-time highs. And then when it did, she said, I remember that. You were right. That's true. I went, thank you. That's because I used this indicator beforehand. I know before I go on air what my views on things are. It's that simple. Okay, so it helped me sort of have a TV thing, profile, raise the fund, having won those won that competition, set up the hedge fund. Merrill Lynch, HSBC were among several banks who then licensed this software. It was in a different format then, and I got paid about $1 million, or rather my company did, which was then used to set up the hedge fund. That's me when I had hair, setting it up. That's my first set of offices back in 2004, Linden Hall and Regent Street. And I continued writing column for the FT because they said, well, you write a column about how you're making money and, you know, your journey and all the rest of it. I did 5 years weekly column there. Some data I want to give you. The 1 hour time frame we found was the best. Why? And you can do this with a day job. We gave our traders to do a number of trades, and they did 25 trades in a month on average. The net pips captured was 2,250. Now, some months it was a lot more than that. Some months it was a lot less than that. But on average, it was 2,250 net pips, i.e. winning minus losing. That's really important to know. The best winning streak was 70 wins out of 100. The worst was 30 out of 100. This is our team, not yours, our team. Okay? Now, assume they just did $2 a point, which you shouldn't. It's too large. $1 a point is too large. I'll tell you how some brokers like to do 7 cents a point in the Q&A. Okay, so if you did 2 sets and the average stop loss was 50 points away, you'd lose $100. But you would make, in a month, 2,250 times $2, which is 4,500. Right? Some months you'd make more, some months you'd make less. It'd iron out, and you'd look to try and hit the average. Okay? That's how trading works. There's no guarantees. Some months you make more, some months you make less. Hang on, 4,500's not what our target was. Our target's 10% of that. It's about 500 to 1,000 a month. So we knew that we didn't have to tell people to do $2 trades. They could do 20-cent trades. That's when we knew we had the Google of trading. We've got something which is mass market. 20 cents a point allows you to tell people to start very small, almost risk-free. Well, actually, demo accounts even more risk-free with any broker. And we'll talk brokers in the Q&A. So then people said to me, it was actually one person in particular who was at Barclays. They said, we want to spin this hedge fund technology out. I knew them because of my hedge fund. And we want to IPO this, basically. We think you should create a fintech, spin out, and IPO it. And that's where this idea came from. And I said, no, I don't want to do it. I'm running a fund. He said, no, why don't you do the tech company as well? That way, You've got a fund which might get $1 billion of assets under management, or you've got a tech company which might. I'll show you how to download it in a second, okay? It's self-paced, get one-to-one attention from us, convenient, compatible with work, no subscription fees. Here's the thing, no costs or no ongoing costs at all. All the data free for life, all the mentoring free for life, all the course material free for life, all the updates every day free for life, all the calls with us, including me, free for life. You might say, well, wait a minute, how do you manage that in time? Well, people are making money. They don't need to keep calling me. Why do you want to do that? Because we want to create $1 billion company. Once we get about 1,500 of you through the software, using it and profitable, we can go to the venture capitalists and say, this is at least worth $50 million. And they'd say, yeah, it is. And then we'd float it a couple of years later. And then a couple of years after that should be $1 billion business, because there's trillions in the trading market. Ongoing support built to suit the student and so on. So it was called pipspredator, which is all those things. Stop loss, volatility-based stop loss. It shows you volatility-based position sizing, shows you where to add to winners, shows you where's the signal on any currency index, stock data, where's the entry, shows you, can send you a signal on your phone if you wish, but would rather you just looked at the screen for 30 minutes a day before and after work, and that's it. Okay, and it was called pipspredator thanks to Biku from Barclays. Can it make money? Yeah, I'll show you some more trades in a second. Is it easy? Yeah, because you're able to do it around a day job and you're just looking to see when to enter, when to exit. That's, you know, pretty easy if you ask me how to do that. The Americans are going nuts as well at the moment. The Americans are going really nuts. Well, I guess in many ways it's a good time to have the webinar then. So that was that. And then what the heck? There you go. That's a 100-point rise on the S&P 500, which is pretty darn rare in one day. Thank you very much, S&P 500. Does it make life easier? Yes. Are there checklists? We'll give you the same manual we'll give our trainees in the hedge fund, okay? This, full disclosure, is not me. It's one of my students. Euro, US dollar, 3 hours, 75 pips. $2,250 in 3 hours. Why such a large position? Because they build up their profits over a period of months, and then they've got more money to trade with, and that's how they increase their capital. They do it that way. That's what they do. Okay. Another one, similarly, same story. We're really proud of this. This is in the jacket cover of my Financial Times book, clearly elucidating the methodologies of successful trading strategies. Methodologies of successful trading strategies. That's the chairman of the Chicago Board of Trade who's endorsed what I'm talking about and the strategies that I'm telling you about. This is what trading's like without an indicator. This is what it's like with an indicator. I want to give people signed copies of my 2 most recent books, so physical books, and a trading journal just for trying this. Just for trying it. You get to keep all of that. Plus a USB stick, and there's a few other goodies in there as well, just for trying this. 100%, no quibble, money back guarantee, just to try. We want to float this company eventually, and I want people to come on board in batches of 25, make money off this. And the more of you that make money, I have only one condition. Please do a video, honest one, for the VCs, just to do an interview and say, right, this is our experience, because that increases the valuation of my company when we go up. There's no ongoing fees at all. There's no subscription fees. There's no tuition fees, no upgrade fees. We're on version 4 at the moment. There's none of those fees. We update things every day. So you might say, well, how the hell do you manage that cost? We're doing fine. Thank you very much. We can subsidize all of that until we get to our 50 million valuation for the technology. And there is no condition to the money back guarantee at all. Somebody said, do you have to send in your trades or anything? No, you might just say, did nothing for 30 days. Can I have my money back? I'd like to keep the signed copies of your books and everything. Yeah, absolutely fine. That's the guy from Barclays. He's now left and lives in Dubai. I love the pipspredator, and I spend most of my time trading. And I love that as a novice. I know what to trade, when, how much, and can leave at the exit price and get on with my other work. He's been phenomenal. It was his brainchild. He was the one at Barclays who was going to IPO. It's going to have to be somebody else from somewhere else now, because he's left that. Limited to 25 licenses per annum. People ask me, why do you limit it? Because it's me doing the mentoring. I've also got another hedge fund manager who's co-author on some of my trading books, who's got the same mindset and vision as me, Paresh Kiri, and he also helps with the mentoring, but it's principally me and my responsibility. When people sign up, they get the connection with me, they get the WhatsApp with me, and they get the video call with me, they get all the logins and passwords with me, and they send me their trades. If you want to join, you want to get the software and don't want to do it all manually, because manually it's multiple indicators, multiple time frames. I'll recap that. Price confirmation, scan 20 to 24 instruments. If you want to know which ones, it's these. Okay, scan these instruments, right? When you've got the software, we tell you which ones all the time that we particularly like, and we share that information and data with you all the time, so you know exactly where we stand. Somebody just asked about Amazon. Yes, Amazon is still short, still falling. That, whatever's happened in the markets, in the indices, that hasn't impacted the Amazon side of things at all. So I hope you will come on board and see what we're trying to do. Join us on our story and our ambition for doing all of this as well. And you go there to do it. There is a 12-week course, a 30-day course. Let me tell you what there is. And there's no ongoing charges, Maurice. There's no ongoing charges at all on any of this. Instant download, full support. We've got a 24/7 helpline as well. You've got calls with me, money back guarantee. You've got webinars on Saturdays from 10 a.m. till 4. So you've got lots of ways of contacting me. Meet me in person. I hold regular physical events as well. You'll be part of my trading club, as it were. Lifetime mentoring, no ongoing charges. And the reason we do that is because we don't want you paying subscription fees, data fees. You don't have to do any of that. That's all included for life. Okay. Because we think it should be a no-brainer. Our ambition is to be in one of these two lists, either the world's top earning hedge fund managers or the world's most valuable startups. It's as simple as that. We want billion on one or the other. Yeah, what else are you going to do? That's the aim of it. And that's the goal of it. And I hope you will sign up. There's a whole bunch of you who did yesterday, and I'm really delighted to have a brand new class of students. Let me know as you do today. Come on board. Lauren, I can see yours has come on. I can also see Jimmy and Jeffrey. Thank you very much. It's gone through. Dippin, yours has gone through as well. Thank you very much. That was really quick, some of you. I'll show you where. Now, what I want you to do is also, I've got to show you something else. That's the website. But before I come to that, when you go onto alpeshpatel.com/here, you'll come to something which my designers said, you've got to do it like this. It looks a bit ugly, but they said you've got to use big stars so people know there's no ongoing stars. PC and Mac, no problems. Currencies, pairs, FTSE, Dow, oil, stocks, all of that, lifetime mentoring, and have a big hurry sign. Explain what the usual cost is, 5,000, but webinars keep a discount because you've invested an hour of your time, and a big yellow button which says add to cart. And when you click on that, it'll take you to this. You can split pay if you wish. We want to get about 1,500 people through onto this in batches of 25. You're in for life, but in batches of 25. We've probably got to about 800 by now. And once we get to 1,500, I think we'll have about enough evidence to show the VCs that, yeah, this is special. These are the people. And there's even a website, alpeshpatel which shows you all the, not all, but loads of videos and stuff from people as well. Okay, so that's what will happen when you go there. Don't forget also to follow me on LinkedIn. Thank you, everyone signing up. I'll give you a shout out. Just put your name in as you do. Andy, I can see yours. Thank you very much. That has indeed come through. Don't forget to follow me on LinkedIn because you'll see my articles and stuff on there because it's a good way to connect. It's an important way to connect on there as well. Andrew, yes, I believe yours has as well. So we've got an Andy and an Andrew. Thank you very much. Others, just let me know who's signed up and I will make sure. Guess what? It gets better than that. Not only do you download the software and we have somebody who will install it for you if it takes more than 10 minutes to do, but also you get Zoom calls with me, but also there's a 12-week course. I say 12 weeks. You can take as little or as much time as you want. And it's updated regularly. It's yours for life. And it's very structured. It's like this. Okay. It's very, very structured. Look at this. Latest videos, start. So you know where you are to start and finish. When you finish it, you'll get a certificate. That certificate you can put on LinkedIn and part of your career profile. We sometimes get parents getting this for their kids because they want their kids to have knowledge in finance, have this certification because I'm a FCA regulated hedge fund manager. So you've got that on your CV. There's all sorts of reasons why people do it. And then what you have is week 1, week 2. You can see it here. Very structured. You don't have to do this part. The bare minimum you need to do is download the software, read the manual. The maximum you can do, if you wish, is do the whole 12-week course and the 30-day course. Okay, and they're updated, as I said, and they're there. And Telegram channel, there's a private Telegram channel as part of my trading club for Pips Predator users. That's also part of it, and that's updates every day on what we're trading. So you can do as little or as much as you want. I get some students who just place their trades, don't speak to me, and they say, "Oh God, I make a few million." If you want the interviews of those people, have a look at alpeshpatel.com. There's actual video interviews we've done with those. There's one chap who wanted to set up a shipping company, and he set up 2 with the profits he made from Pips Predator, and I was over the moon. He did it. Like I said, very structured. So there's all that course material that comes into it as well, which makes me really, really pleased. On top of that, through the dedicated website, you will see we have a lot of links which will tell you where to go, what our performance looks like, how everything works, and all the rest of it. I wanted to make this an absolute no-brainer for everybody. Okay. I think I mentioned Dippin, that yours gone through. We have got Bolvia. We've got a Balbia and a Bolvia who's gone through as well. We've got Niran. Yours has gone through. Alexis, yours has gone through. Thank you very much. Delighted on that. And looking forward to that hand-holding, that exciting new period where you're learning something from a mentor. And it's really fulfilling for me because as your mentor, not are you just learning this, but, you know, to see you guys succeed as things go forward. Now, remember, we were just being short Bitcoin and then it had been rising slightly, and that's where we'd got to. That's where we are now. So you saw that earlier on. So that has worked out well. Okay, I think we were about here, weren't we, when the webinar sort of started earlier. Now we got to this, and this is where we are now by the end of the webinar. Okay, yeah, that's it. I mean, what can I say? The trade speaks for themselves. They're not all profitable. I mean, that one didn't work out, did it? But this did, and that did, and this did. I guess this was the meaty one. And now, I guess, to some extent, this one's a bit of a meaty one. Okay, that's just Bitcoin. Do I care it's Bitcoin? What's your views on Bitcoin? I don't have any views on Bitcoin. All I know is it bloody moves. I can trade it. If it moves, I can trade it. It's a bit like a car driver saying if it's got wheels and an engine, I can bloody drive it. It's a bit similar to that, really. Okay, and that's it. Any questions? Is there anything I've missed? Alex, has yours come through? I will double check. I thought I said, Alex, forgive me. I thought I said your name already, Alex. I'll double check. As well, because we normally get a ping from an email ping on this. Okay, so I will double check, my friend, on this. Whoops. I have got Alexander, yes. Andrew, yes, it's come through as well. So delighted. There's a few of you. Yep, perfect. It has come through. My apologies. No apology needed. Raymond, which broker or brokers allow you to place 20 cents a point? Actually, 7 cents a point. So first of all, with any broker, they have to be FCA regulated. I don't want them out of Cyprus, okay, or Malta, because otherwise you're going to lose all your money, guaranteed. Right? So first, FCA regulated. So if you look at FXCM, they do 7 cents a point. When we're starting new teams in my fund, I start them with $1,000 of my own money. Why do I do that? I start them with $1,000 of my own money because I can't start with client money. They've just started for obvious reasons. And if it's my own money, I'm not going to start them off with lots of it. It's my bloody money. So we start them training with $1,000 and 7 cents a point. That's it. 7 cents a point trades. That's what you want. Brokers want you to trade larger size because they take the other end of the trade. They know you're going to make mistakes. By the way, success tips. The apprentices who are the most successful in this are the ones, generally, there's been 1 or 2 exceptions to this, are the ones who send me screenshots of the trades before in the early days when they're setting it up and they're sending me those screenshots. They're generally the most successful. There have been exceptions where I've not heard from them for like a year and they come back and they say, I just made an absolute killing on this. And I'm like, flipping heck, mate. You didn't even call me once. He goes, didn't need to. The manual was fine. Got on with it. And I'm like, wow. Because I thought they'd have 1 mentoring call. I'm not kidding. There are 2 people who've made millions who didn't even have a single mentoring call. They're on alpeshpatelreviews.com. We've got videos, interviews with them. And that surprised me. It's nice, obviously, that it happened. And they get back a year later. There are others who are more normal who will send me screenshots, and that's what they need. Me and Paresh will look over it, and we'll do it that way as well. David, are you willing to hold a place until I'm ready to start in a bit of middle of the moment? Yeah, David, don't worry. I did that yesterday for a couple of people. I'll hold a spot for you. Not a worry. Jeff, if I were to risk the maximum 1% capital per trade, is the maximum number of trades you are prepared to have open at any given time? I would say, so that's a really brilliant question, Jeff. Really brilliant question. When you're a private investor, sometimes you'll actually do more than 1% a trade, and that's fine. And the reason you'll do more than 1% a trade, the reason for that is because you're a private investor, it's your money, you're not answerable to anyone, okay? And you've got less money, so you want to start off stronger, and that's fine as well, okay? I would have, let me put it this way. Let's say you opened 4 positions and they were all correlated to each other. So let's say it was Microsoft, Apple, Amazon, Alphabet. They're all correlated to each other, aren't they? Well, then you've actually got 4% exposure in one position. And you can work out, if you lost 4% of your capital, where would you be? It's not too bad, but yeah, that's why you want a bit of Forex, a bit of UK stocks, US stock, an index. That way they're not correlated, in which case 4%, 4 positions open at one time is not because of the risk element, by the way. It's because of how much can you focus on at any one time. Partly because of the risk element, but partly how much can you focus on. So those are the numbers I'd give you. Any other questions, anyone else? Otherwise, I am going to go to, David, we kept yours. I'm going to go to my apprentices. Sorry, I've got a few people I haven't announced. Let me just see. Patrick, yours has gone through. Marcus, yours has gone through as well. It just says G on here. G, yours has gone through. I've got your email address though. So I've got yours, whoever G, I've got yours. So thank you very much for that. Oh, you might have seen these new adverts on Ripple. Okay, let's just have a look at Ripple. So I bought Ripple ages ago, and just out of interest, not because I've got some secret knowledge on it. I don't. And just in terms of the trades, which you did for this webinar, we don't normally trade this many cryptos, but it was for the webinar because I know there's a lot of interest because it's been in the news a lot. And now Ripple have started advertising. So XRP is different to Ripple. They're both, XRP is created by Ripple. XRP is the crypto. So this is actually the crypto, which everyone calls Ripple. And that's fallen there. This trade didn't make. That went down. And then at the moment, we've got this signal, and there's the green line. So that's where we are on that. So the cryptos are having a bit of a revival. Now, should they go back to their earlier highs, we're looking at substantial gains there. I think at the moment, with the markets being so dislocated, one thing which is clear is that there are substantial gains that are happening. When you saw that with the currency moves, there are substantial gains happening in ridiculously short spaces of time, which really shouldn't be happening in such short spaces of time, but they are. And it's a little bit, it's just a bit weird what's happening. You know, there's some hedge funds making 21% returns in a month. Now, I'm not used to seeing any of that, but we're seeing it at the moment. We're seeing it at the moment. And so it's a good time for those of you who signed up. I mean, personally, as an entrepreneurial optimist, I always think there's a good time. How do we access? Alex, yes, very good question. Alex and everyone else who just bought, there's about 20 odd of you who've just bought. You will get a personalized email with me with your login codes and your email. Allow me about 10-15 minutes after the webinar to get through everybody and onboard them. I do that personally. Why? Because I create the personal email video, and I'll mention you by name. So for instance, I'll say Alex, I'll say Andrew, etc. The reason for that is so you know it is me taking direct responsibility, but it's also part of that commitment to show you what it is we're up to and what we're doing. Okay, so that's that. What I want to also do is just check if there's any other questions. Otherwise, I'm going to go to my apprentices. You're going to be part of my club. We often do events. I've got one on the December the 5th, if you want to meet me and so on. And so I do try and meet all my students in person. Also, it's the other thing. I will be your mentor. That means for everything. So sometimes you'll ask me about career advice. I don't mind. I will give you career advice. Sometimes some of you have asked me about business development. I'll help you with that. Capital raising, career advice, CVs, your kids, internships for your kids. That's all fine. It's all part and parcel of it. I want this to be a total no-brainer because my ambitions are very clear. If you're going to make $1 billion company, you've got to do something which is a no-brainer for people to use. And the no-brainer part is not just, oh, I've got a man who got some trading signals. No, it is welcome to my universe. We've had events in Parliament. We've had career advice we give, networks. So join me on, if you're clients, join on LinkedIn. I will accept you. For non-clients, you can only follow me. But for clients, you will be connected to me and my networks will be open to you. That's part of the deal. Okay. My networks will be open to you. It's as simple as that. I kid you not, who's calling me now. I'm not going to tell you, but I'm going to have to take this call in a second. And it's not my wife. It's hopefully something really good. So, okay, I'm going to go. And I've been waiting for that call. And that's that. And I'll leave you with this. Looks like some of the profits are coming off the Dow anyway. Here. Oh, by the way, the reason for these 5 hours, we explained in the manual, it just gives us an indication of the strength and momentum whilst we're in a trade. So at the moment, it still looks very strong, even though some of the profits, obviously, there's bound to be some profit taking happening at the moment. But we'll keep an eye on that. By the way, those of you who signed up, we'll start trading as early as this afternoon if you wish. You know, we'll set you up and everything else. Okay, so Alex, Andrew, everyone else, just wait for those emails from me, and then we'll set up the download, get you connected to Paresh and the team, Judy, who can help the installation if it takes more than 10 minutes. So you'll meet the whole team. We have a WhatsApp for each one of you individually, so you can contact 24/7 if you wish us. So if I'm sleeping, Judy will pick it up or somebody, and I'll see what the conversation is. And that way you're really intimately in the team. And my networks, my mentoring, all the rest of it. Okay, absolute no-brainer is what I wanted. Thank you all very much. I'm going to leave it at that. We've had a good afternoon. You've all been very lucky for me. Thank you very much indeed for that as well. Really appreciate it. Somebody just asked me about Google. There's your Google. That's where we are on Google from. You're asking me because of yesterday. Yeah, well, it's still, that's where it is from yesterday. Now, if you were in this position, you said to me, what should I do? I'd say, well, look, if you're feeling risk averse, just take the profits and run. You know, it's fine. You've had a little bit of a gain. You had that short position earlier, which was a gain. Others might say, no, I'm feeling okay. I'm going to stick with it. I think it'll turn around. I'd say, look, arrows are now all over the shop. Just take the profits, run. Okay. So we give you that level of hand holding on these things until you get fully trained up. Thank you, David. Look forward to you connecting. Thank you all very much for being on the webinar. I really appreciate it. Thank you. Whoops, that's me. Okay. So thank you all. I know you can still see me. There you go.